In this video, traders, we're going to look at lessons learnt from Bill Ackman's $4 billion loss on Valeant Pharmaceuticals. Stay tuned. Hey traders and investors, a very warm welcome to you. If you're a subscriber, thank you for your support and welcome back. If you're new here, a warm welcome to you too, and consider subscribing down here somewhere. All right guys, so Bill Ackman, Pershing Square Capital hedge fund manager. We know we've talked about him in terms of Herbalife before. Have we talked about Valeant? Probably not. Let's have a look. So this guy went in, I don't even know the thesis behind the trade, but the point is this. He bought Valeant, whatever level he did, it went up to $260 a share. He sat with it all the way down to $20 a share approximately. What lessons can we learn from this pretty diabolical trade? By the way, he's closed the trade now. He crystallized the loss. He got out. He's since kind of spoke to shareholders of the fund, talked about it. He's done all sorts of things to remedy this, but there's still lessons to learn. He says he's made mistakes. He's learned the mistakes from it, but let's see for ourselves. Okay, number one, risk management is everything. As far as I'm aware, he had 12 billion under management and he put 4 billion of it into this trade. Now, whether that was allocated assets, whether they had other assets or not 100% sure on this. However, the point is it did some significant damage to his fund. I think he was something down like 12%, maybe it was 20%, something pretty hefty for a fund that's normally plodding along quite nicely. The point is, guys, what's the takeaway for us? We're not going to lose 4 billion. Hopefully we're not. But the takeaway from us is, hey, listen, risk management is everything. Don't go in too heavy into one specific position. Don't risk too much in one, whether that is an investment in a longer term play on Valeant Pharmaceuticals, whether that is a short term trade on GBP USD for a number of pips. Whatever the situation is, guys, risk management is crucial. Do not average down. Another thing. Paul Tudor Jones had this on his wall at the back, losers average losers. Do not average into a loser. If it's going against you, the story isn't fitting, the trade isn't fitting the story you're putting to it. Your thesis is incorrect at the moment. Wait for it to go in your direction. Do not average down. Unfortunately, Bill averaged down, he added more, he added more, he added more, he even ended up buying options. He was doing all sorts because he was so caught up in the story that he was right and the market was wrong, and it damaged him badly. And that's the thing. Humility is everything. Ego needs to be checked at the door. He went on CNBC with this. He publicly talked about it, and I get it. He was probably trying to do it to push his book and sell his book and tout his book in terms of his portfolio. I mean by book. So he was trying to kind of get a bit more incentive behind it and get a bit more awareness, so perhaps more people would buy the stock. But his ego maybe got the better of him a little bit. Maybe he was kind of banging the drum too much, thinking he was right. And instead of kind of cutting the loser and saying, you know what, it's a small loss, couple of 100 million, whatever it is, he averaged down, he added more to it, he got more committed. Because he was so emotionally committed, his ego was committed, he got on CNBC, he put himself out there so much, he felt like he had to defend it. Hey Bill, it's down another 50% from where you bought it. Surely, has the story changed? No, it hasn't changed. It's still a great stock. What are you going to do about it? I'm going to buy more. You can see how that cycle happened. And as with traders, how can that affect us? Price we're in goes down, lower, 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 lower. We end up buying more, it goes lower, we end up buying more, and we're buying it now to defend our thesis on the position that actually we should just be cutting and moving on, looking to the next one. I'm sure if he cut that early enough here or wherever it was and looked to something else, forgot about that, took the hit on that, found another great investment idea, allocated capital to that or allocated more capital to his existing investing ideas, he'd be doing far better off than he was now. So, final thing is, it happens to everyone, guys. Bill Ackman, very, very good seasoned fund manager who hasn't made very many mistakes throughout his years, had lots of years of good growth. Everybody makes mistakes. Warren Buffett's made mistakes. The big players still make mistakes. So you and I can still make mistakes. The important thing is we don't let them damage us too much. This probably damaged him too much. It didn't wipe him out. He's still running. I know he's lost a lot of money because he had a lot of capital, personal capital and personal wealth in the fund. He's also agreed, I believe, to waive fees until they get back up to the high benchmark. So he's done a lot. So he's personally going to lose a lot of financial wealth from that. But he says, which is probably the thing when you're managing money, it hurts him more that he's hurt and lost other people money than himself. So a lot of damage done from this, not just financial, psychological, reputational damage, not great. He probably will go back and do it differently, I'm sure he would. But one of the main things, risk management. If you get good risk management, you don't get yourself into a big, horrible hole from one specific trade, one day, 1 week, 1 month, whatever I mean. Averaging down, don't average down. If the idea is not working, cut it, get out. Humility is everything, not letting the ego get in front of you. And finally, it can happen to everyone. And it can happen to you if you don't have the risk management under control and you're not aware of it and you let yourself, the ego get the better of yourself. So take those things on board, learn from his mistake. Hopefully you're not going to make a $4 billion mistake like that. But if it saves us a few £1,000, great. All right, guys, take care, keep your risk managed. See you in the next one. Bye-bye.